Hello and welcome to Signal or Noise and our annual property show. Interest rates have not, much to the chagrin and disappointment of many investors, come down so far this year in Australia. And yet, despite this, the housing market has continued to remain remarkably strong. So much so that Macquarie Asset Management put this thought piece out entitled, "If you can't beat 'em, join 'em." Seems rather savage for some, doesn't it? So is now the time to join 'em and pick up an investment property? Well, joining me are three of Australia's most astute property investors and commentators. Our resident economist, Diana Messina of AMP, is one of them as you might expect. Hello, Diana. And joining us for this year's property show, how's this for a lineup? Louis Christopher, founder of SQM Research. Good to see you, Louis. And all the way from Melbourne, bless him, Andrew Schwartz, Group Managing Director and co-founder at Qualitas. Hello, everybody. Thank you for joining me.
Pleasure. Thank you.
Good to be with you.
Let's go straight ahead with our first topic. And while the headlines would have you believe that housing is unaffordable and therefore a bad investment, what is the reality? Oxford Economics recently highlighted that Australia may fall short of its goal to boost housing supply by 1.2 million dwellings over 5 years by over 20%, or put another way, a deficit of about 164,000 homes. You can see just how challenging meeting this government set target will be in this chart, which also gives you some indication as to how much construction has slowed down in recent times. And to compound all of this, there is a new industry report out which suggests that there is a significant shortage in skilled tradies to build those houses. Now, their research suggests that Australia needs 83,000, yes, 83,000 extra tradies if they want to reach some semblance of parity. So yes, on one impact, we do genuinely have a housing problem, crisis, whatever term you want to use in this country. But others found this situation as a chance, as an opportunity, like Macquarie Asset Management, who say that an environment of stretched affordability means there will be more demand for modest dwelling developments and the builders who want to move into that space. So, let's get into it. Panel, Deanne, I'm going to start with you as I usually do. Is there a signal here to invest in affordable housing, even if you're a first-time buyer? Signal or noise, Deanna?
I'd say it's a signal, but we have to think about which investor are we talking about. Are we talking about the individual, so the first-home buyer or the second-time buyer or the property flipper, or are we talking about it from a point of view of an investment firm making a decision around housing, or, for example, like superannuation funds potentially investing in housing? I think that there are important qualifications because, as with any personal financial decision, it's based upon a number of different factors, and whether you're happy to rent for a long time, those sorts of issues, I guess. But if you're thinking about it more from an investment firm point of view, those companies, places like Macquarie, for example, they'll be looking for a specific return on housing. And if the goal from here in Australia is to allow house prices or home prices, units and houses to grow at a slower rate than where they've been growing in the past few decades, well then the return that you're going to get on those homes is probably going to be softer as well. That's something to keep in mind, which is, I guess, where the importance of the government as sort of a key player in this industry is very critical, I think, in the next few years. They will have to, I think, potentially subsidise some of these companies into investing in housing. Otherwise, the return just doesn't make sense.
Well, Deanna, let's go through your chart. It kind of builds in a little way off the chart that I just showed you. But I think this chart probably tells the story of housing supply in Australia. What are we looking at here?
So it's looking at building approvals in annual terms, dwelling commencements and dwelling completions. And basically our level of current dwelling completion, so the number of homes that we're building, is running at just shy of 180,000 over the year to June this year. And we really should be building about 240, 250,000 new homes. The government's target based on the National Housing Accord is 240,000. And you can see that in the last few years, we've actually seen a very interesting gap between completions and approvals. So we should be running high levels of completions based on approvals. Approvals have been slowing in the past 12 to 18 months, but even before then, we weren't building enough dwellings to keep up with the levels of approval. So we clearly have this large pipeline of work that's yet to be finished. Part of that has to do with the tradie shortage that you were talking about, supply issues with materials, and very long cost delays and project overruns with some of these projects, and also, I guess, the the challenges that the residential construction industry faces right now with the infrastructure industry and the huge level of work that's getting done there. So they're competing for resources. So basically it's just showing that we're running so far below those targets. We really need to be building a larger amount of homes. That's really the key to sort of helping the affordability crisis, but I don't think that there's ultimately a solution to the affordability crisis. Australian housing is unaffordable on many metrics. The key thing now is to stop it from keeping on becoming more unaffordable.
Optimistic as ever. Thanks, Dee. Andrew, to you now, signal or noise?
I'm going to go definitely signal, and there's certainly an affordability issue, but also I love markets where you've got demand and supply imbalance. You know, if you're looking at investing at any time, then we don't have a demand issue in Australia. We've got a supply-based issue, and so I feel favourable to that imbalance from an investment proposition point of view.
All right, thank you for that, Andrew. Louis, what about you? Well, let's bring you into the conversation. Do you say it's a signal or a noise?
Oh, it's a medium-term signal, but that doesn't mean that over the short term we cannot see some price falls. Indeed, on our numbers, we are now recording some modest falls in the Sydney housing market as well as the Melbourne housing market. But over the medium term, yeah, it's definitely bullish for investors, notwithstanding that a few factors out there in the economy and within taxation are deterring investors from jumping into the housing market right now. So yeah, overall, medium-term signal, watch out for some short-term influences such as the direction of interest rates.
All right. Andrew, I want to bring you in here because obviously you've got a property investor's hat on, as it were. I do know that 80% of Qualitas's investments, and that's something in the neighbourhood of $9 billion in assets under management, is in residential properties. So I guess what specific types of, if you put your investor hat on, what specific types of assets are you in at the moment, and what makes resi, in your view, such a compelling investment opportunity?
Yeah, we're really in two different classes of assets. The first one is outside of the four major trading banks. We're one of the biggest suppliers of private credit into the real estate markets, but particularly the residential market. And from our point of view, we get a lot of safety and comfort out of knowing that generally values are underpinned. If I wear my real estate credit hat, it's really an analysis around making sure that values don't fall by too much to below where we've given wholesale loans to commercial developers and real estate investors. So for supply and demand imbalance reasons, as I said earlier, it's easy for us to, actually easy is a strong word, we're able to get comfortable with the underlying long-term values. The second part of it is we have a very large build-to-rent business. It's a joint venture platform that we own. And we're one of the larger developers and ultimately investors in that sector of the market. And again, we can really see a place for institutional investors who want to take advantage of owning real estate assets that have diversified tenant pools, long-term investment cash flows that should escalate quite well over time. So comfortable with both of those strategies for Qualitas.
All right, thank you, sir. Moving to everybody's other favourite subject when it comes to housing, policy. We are seeing two new policy initiatives being proposed. One will affect people across the country, and one is specifically for Victorians. So the first one here, federally speaking, the Australian government has a $1.5 billion housing support program, and it's one of the range of measures designed to help achieve that National Housing Accord target. That's what Deanna was referring to earlier on the 240,000 home target. The 2024-25 budget invests something in the neighbourhood of $6.2 billion in housing initiatives, and total government, federal government investment in housing since 2022, somewhere over $32 billion, which really just impresses upon how important this issue is, of course. In Victoria specifically, there's also been a move towards upping supply, but the focus is a little more on infill. They've announced 50 key transport areas where local planning laws would be overridden to allow high-rise apartment developments of up to 20 stories near some stations. So kind of like boosting supply on steroids, if you like. This is, of course, in addition to the fact that net overseas migration projected to drop. So, panel, and Andrew, I'm going to start with you again, sir. Are these two policy offerings going to make a material difference in solving Australia's housing supply crisis? Or do you think it'll have a negligible impact, sir? Signal or noise?
I think it's a continuing signal, and government's doing what it needs to do in terms of helping with policy and government spending to help facilitate new supply coming into the market. I do think it's only one part of the equation. You do need affordability and purchaser demand. You need revenues to be at the right cost structures. You need builders who are able to put supply into the market. So they're all really critical elements of getting supply. But I definitely think that from a developer's point of view, a lot of it starts with land availability, the time taken to get your development approvals and actually commence a project, which is a big cost of the project as well. So I think from that perspective, it's a positive signal.
Okay, thank you very much. Andrew, let's take a look at your chart now. It's around population growth. Why is this chart of interest to you, sir?
It's of high interest because when I look at the economy overall, I see an economy that is in per capita GDP recession at the moment. Really, the positive growth is coming from migration. A lot of the infill supply of apartments is met by migrants. Studies show that a significant proportion of them on arrival end up in infill apartments. So, and also for the ability to get skilled labour onto construction sites. I think migration has a real positive multiplier effect on residential property. So we watch it very closely.
Okay, thank you, sir. Louis, let's bring you back in the conversation. What do you say, signal or noise?
Oh, look, I think the initiatives are a signal, but I'd like to see more on the taxation front. In terms of the population, the projected population, well, I know what the projection is for Treasury. As you mentioned, 260,000. The truth is, when you look at the arrivals data through to June, we're not really materially slowing down. So I think we'll have yet another year where Treasury's essentially significantly underestimated the growth in migration. That means there'll be continuing pressure on the rental market. So I don't think we'll see any great relief over the short term. I think we definitely are going to miss the 1.2 million dwelling target by some margin as well. On our numbers, it looks like for this current calendar year, 2024, we're only going to build about 150,000 dwellings, whereas Deanne mentioned before that the run rate required is 240,000.
Yeah, absolutely. Well, speaking of policy, let's look at your chart. In your case, it's going to be monetary policy, and this is a chart that viewers of this program will be very familiar with because I've brought it along in some stage or form numerous times over the last 3 seasons. Tell us what we're looking at and why it matters to you, sir.
Yeah, really interesting. So as we can see, the money markets are pricing in some rate cuts for 2025. However, the environment has changed from only just a few weeks ago. So a few weeks ago, there were multiple rate cuts being pricing right throughout the course of the year. That's now changed to the point where basically the money markets are pricing in a rate cut from about mid-2025 onwards. Now, the reason why I raise this is that you may recall this time last year, there was a great expectation by the community and by certainly participants in the housing market that we would see a rate cut sometime in the first half of 2024. That didn't happen. And so a lot of those expectations were dashed. And it's one of the key reasons why we are actually, in my opinion, seeing a slowdown in the Sydney and Melbourne housing markets. And the view is, okay, it just goes back to the short-term view here that yes, there are medium-term buying opportunities, but I don't think there's any great rush right now to get into the marketplace because we're not seeing any imminent rate cut occur.
I think of what we were talking about last episode actually, Dee, with Paul Bloxham and HSBC's view of the idea that the RBA may not cut at all, but again, another push out. Thanks for bringing that along, Louis. Deanna, we'll bring you back into the conversation. These policy pointers, are they going to make a material difference or is it a little more of a negligible impact in your view? Signal or noise?
Signal, but I agree with Andrew and Louis that it's sort of just part of the broader policy environment that we're in. It's good to see the government apply more policies into housing, trying to get more supply through the market. But Is it going to make a material difference to the availability of the housing stock? I'm not sure. It's just, I guess I'm not that optimistic that it will. I guess I just see it as part of the broader policy spectrum that we have around housing. But the government can sort of have as many policies as it likes around this. Fundamentally, I don't know if it will actually get the needle moving dramatically on the number of homes that are being built. That's sort of down to more than just government policies around wanting to build more.
Yeah, absolutely. All right. Well, let's have a little bit of fun now. And panel, I invite you all to take part in this. Have a go at this at home as well. Leave your suggestions in the comments to this question. Let's say you are given the Housing Minister portfolio for a day. I mean, why not, right? We all wish we could do that for a day. You get to be Housing Minister for a day. You get to make one change, any change to existing housing policy. What do you choose to change and why? And maybe, Louis, I'll kick this off with you because you've already talked about taxation.
Yeah, I wish we could have more than one change, and I wish we could have more than one day. In fact, I think we'll need a lot more than one day. Look, yeah, absolutely, taxation. So as mentioned before, I think you would see a lot more liquidity in the marketplace if we actually brought in a land tax and got rid of the very state stamp duties. And I know that would be very difficult politically to do it, but hey, we did bring in the GST eventually. So I don't think it's entirely impossible. The next thing I would do, if I'm going to raise one more thing, over the short term, is
you're a man of action, Louis.
I can't
in one day.
Short term, because this is something we can fix within a matter of months. It's not a long-term solution, but short term, I would cut migration. I would get it down to those targets because we have a short-term rental crisis, and it's definitely on the demand side.
Okay, there you go. How about that? 2 changes in one day. Deanna, you get to be Housing Minister for a day. What do you want to change and why?
I'm going to go with what Louis said around immigration, but then I'd have to be the immigration minister or the foreign affairs minister. I think that if I just have that sort of short-term view and you only have one day in office, well, that's probably the easiest thing to do right now. Immigration is really important for Australia, but at least in the next 5 years, we probably need to be running numbers closer to 200 to 250,000 net immigrants a year, back to where we were before COVID. As Louis said, we're running at numbers of 400 to 450,000 per annum at the moment still. It's just way too high for the number of homes that we're able to supply. And, you know, if I was Housing Minister for longer, I would try and get more coordination between the local, state and federal governments around trying to boost the supply and with the developers as well.
Yeah, absolutely. Andrew, do you?
I would say that there's a role for government to help underwrite projects. So the big issue for developers is having certainty of sales, revenue, so that they can activate financing. And I think that as a really novel idea, government should say, why don't we help underwrite some of the sales on a particular project, maybe not at full market value, it probably doesn't need to be at that type of level. Worst case is we're going to put supply into the market for affordability and social reasons, and I think the government has got a role to play there.
All right, thank you, sir. Thank you all. Let's move to our third topic, and it's another classic Australian topic, auctions. One indicator of the housing market in Australia, or at least the strength certainly of the housing market in Australia, housing assets have now passed the $11 trillion valuation mark. Another sign of that strength is this headline. 171 suburbs across Australia now have median house prices of over $1 million. But there's also a different kind of data point of note, and it's this one. The combined capital's auction clearance rate, it has continued to fade. It fell recently to just under 64% based on preliminary numbers. And if that held out, which I think it did if I'm not mistaken, that is the lowest preliminary clearance rate since the week ending December 18th, 2022. So, panel and Louis, we come back to you to start this third round. Is something like auction clearance rates a reliable signal for a slowdown in demand and therefore house prices? Signal or noise, sir?
It is a signal, and I've been following auction clearance rates and indeed providing data on auction clearance rates since the year 2000. And I found it to be a very reliable indicator in terms of picking turning points in the marketplace. That said, you've got to be very careful of the data out there, and these preliminary clearance rates, which are quoted often, are usually very lofty numbers. The number we have been reporting in Sydney is now being 41% clearance rate over the last week, and in Melbourne we've got it at 47%, and they have well and truly come off their highs that we've been reporting. So in terms of a leading indicator, it's definitely suggesting Sydney and Melbourne are slowing down, and as reported by CoreLogic and ourselves and others, we are now recording housing price falls in those two capital cities. For the other cities, clearance rates are not such a reliable indicator because the relative auction markets are far smaller in Perth, for example, in Brisbane. Adelaide and Canberra have fairly healthy auction markets, and they are starting to record a little bit of a slowdown, but it's Sydney and Melbourne where we are recording the housing price falls.
Yeah, and then you look at this data on a daily basis. With what you look at, sir, how much nuance is there currently in the Australian housing market when it comes to prices? As you say, Sydney and Melbourne are one beast, but
Yep.
Brisbane, Adelaide, Perth, Canberra even is a completely different beast as well.
Oh, absolutely. No, we're seeing a significant variety in dwelling price changes right now. So we've got Perth up year on year 25%. We've got Melbourne now on a year on year number down by about 1%. We have Brisbane up by about 18%, and that's the same number for Adelaide. And in Hobart at the moment, we're now starting to also record some price falls. The tiger cities, as I like to call them, the cities which are definitely just moving forward, are Perth, Adelaide and Brisbane. These are three cities with some similarities. Commodities, for example, has helped drive the growth there. Relative affordability compared to Sydney and Melbourne is also shaping or helping drive the growth. Long term, I'm a big believer in Queensland and Western Australia, and I think you'll probably see the Queensland market, particularly the Brisbane market, outperform other capital cities all the way up until the Olympic Games.
All right, thank you. So all the way to the Olympic Games.
Yep.
How far is 2032 away again? Deanna, to you now. Do you think this is a reliable signal for that slowdown in demand?
In the short term, I think it's absolutely a signal, but it sort of just lines up with all the other data that we have around the housing market at the moment, that some of the major markets like Sydney and Melbourne are now seeing price falls, along with other areas like Hobart, and that the regions that have had the strongest growth in the past year, Brisbane, Adelaide and Perth, are also seeing some signs of slowdown at the top end of the market. So I wouldn't say it's a different signal to the other indicators that we have, or that it's telling us something that they don't. It's just sort of correlates with everything else, and clearly we can see that housing affordability challenges are now getting the upper hand, basically, compared to all the sort of demand-driven home price growth that we've had in the past 2 years.
Sure, thank you very much. Andrew, you get to bring us home, sir. Signal or noise? And I guess with your property investor hat on as well, not just signal or noise to you, but do clearance rates and data points like that have any influence on your investment process as well?
Yeah, I'll start by saying it's a signal. I very much agree with the previous comments around needing to really carefully watch the clearance rates. I actually think it's a double-edged sword. On the one hand, I feel that a softening of clearance rates has a certain effect on individuals' balance sheets, because most Australians own a home and their significant wealth is tied up in their own houses. But when I think about what's the major signal for turnaround in residential property markets, for me it's interest rates. And I think the Reserve Bank very carefully watches clearance rates and the housing market when it decides how to act with interest rates in Australia. Over time, interest rates have proven to be very elastic with house prices, so you cut rates and house prices go up considerably. And so avoiding the creation of a bubble would be foremost on the mind of central bankers in terms of interest rate policy. So double-edged sword because of the whole balance sheet effect, but actually could be quite exciting in terms of setting up the economy for an interest rate cut next year.
And that, my friends, is Signal or Noise, the property show. A big thank you to a terrific panel, to Louis Christopher of SQM Research, thank you, sir. Andrew Schwartz of Qualitas, thank you very much. And of course, to Deanna Messina of AMP, thank you very much. We have one show left for the 2024 season. It's going to be our Outlook show. We, of course, take a look back at the last 12 months and then look ahead to the next 12 months as well. If you've enjoyed the program today, you can subscribe to the Livewire website as well as our YouTube channel and podcast. And we'll see you in early December for the last show of the year. Thanks for joining us.